While every financial news channel is pointing at oil prices and telling you to panic, while retail investors are dumping their crypto and running for bonds, while the headlines are screaming about war, inflation, and market crashes, something quietly happened inside the XRP ecosystem that nobody is talking about. And here's the brutal irony. The same geopolitical crisis that is terrifying traditional markets, it is accelerating the exact scenario that makes XRP not just relevant, but irreplaceable. I'm not here to tell you the world is fine. It's not. But I am here to show you what the crowd is missing, what the institutions already understand, and why the chaos you're watching right now is not the story. The signal is clear, but only for those who are actually looking. Welcome back. This channel exists for one reason: to cut through the noise and give you the kind of calm, data-driven analysis that actually moves the needle. No hype, no fear-mongering, just the structure underneath the chaos. Today, we decode what a civilization-level supply chain crisis means for XRP, and why it's not what you think. Let's jump in. Let me start with the hard truth that 95% of people watching market coverage right now are completely missing. Everyone is staring at the oil price chart. And yes, oil flowing through a 21 nautical mile checkpoint called the Strait of Hormuz just got reduced by 90%. Goldman Sachs is warning $100 per barrel this week. Qatar has confirmed a full halt of 20% of the world's liquefied natural gas supply. Iraq has confirmed 3 million barrels per day taken offline. The current supply disruption is already 17 times larger than the peak Russian production hit we saw in April 2022. Here's what you're not being shown. The Strait of Hormuz isn't just an oil pipe. It is the single most critical logistics choke point on Earth. 92% of the world's sulfur, the feedstock for sulfuric acid, moves through it. And sulfuric acid is how we extract copper and cobalt. No sulfuric acid, no EV batteries, no data center substrates, no transformers. 33% of the world's nitrogen fertilizer feedstock moves through that same 21-mile gap. Taiwan has 11 days of natural gas reserves. TSMC, the company fabricating 90% of the world's advanced semiconductors, consumes nearly 9% of Taiwan's total electricity grid. Think about what that means for a moment. This isn't a gas price spike. This is 3 civilization-critical supply chains running through a single choke point that has now been disrupted for over a week. And here is where XRP enters the picture in a way that nobody on the financial news networks will explain to you. When supply chains fracture, when trade corridors go dark, when the traditional mechanisms for cross-border settlement start grinding against inflationary pressure, currency devaluation, and broken correspondent banking rails, the world needs an alternative. A real alternative. Not a theory, not a white paper. An already built, battle-tested, institutionally adopted global liquidity bridge. XRP's entire design thesis was built for exactly this scenario. Not a bubble, not speculation, a bridge. And the world just realized it desperately needs more of them. Let's do the math that the retail crowd ignores, because the numbers here are staggering. According to a recent Federal Reserve study, every $10 rally in oil prices increases inflation by approximately 20 basis points. Oil has already moved from roughly $55 to what analysts are projecting will be over $100 this week alone. That's a potential 90-point basis inflation pressure injection into the global economy, and that's the conservative estimate. Here's what that does to the legacy cross-border payment system. The global cross-border payment market moves approximately $150 trillion annually. The correspondent banking network, the SWIFT-based system that handles most of that flow, is built on Nostro and Vostro accounts. $27 trillion sits locked in those accounts at any given time, functioning as pre-positioned liquidity. Dead capital. Idle. Earning nothing. Simply existing to grease the wheels of a slow, expensive 20th century settlement system. Now overlay the current macro environment. Rising inflation. A Fed that is now trapped. They cannot cut rates into rising oil-driven inflation without potentially triggering the worst inflationary spiral since the 1970s. Currency volatility spiking. Japan imports 94% of its crude from the Middle East. The yen is in free fall. South Korea, which manufactures 70% of the world's DRAM chips and 80% of high-bandwidth memory for AI data centers, imports 97% of its energy through the Strait of Hormuz. The Kosdaq just posted its worst single-session crash in 46 years, worse than 9/11. What happens to cross-border trade in that environment? It slows down. It becomes unpredictable. Counterparty risk explodes. Banks pull back. Insurance companies pull war risk coverage entirely, which is already happening. Maersk and CMA CGM have already suspended operations. And into that vacuum, XRP, through Ripple's on-demand liquidity network, can settle a cross-border payment in 3 to 5 seconds at a fraction of a cent per transaction, without pre-positioning capital. No Nostro accounts, no correspondent banking chains, no 3 to 5 day settlement windows during which currency values can swing 10%. This isn't a prediction, it's a structural requirement. If you want to move $100 million internationally in a world where the traditional rails are buckling under geopolitical pressure, XRP at current prices is not just attractive, it is necessary. Now ask yourself this brutal question. Do you think the institutions haven't already run this exact analysis? While retail investors are panic selling crypto because oil prices are up and inflation is coming, the institutional signal has never been clearer. Ripple's acquisition of Hidden Road, a prime brokerage that services over 300 institutional clients and clears more than $3 trillion in transactions annually, was not a coincidence. You don't build prime brokerage infrastructure if you think XRP is going to zero. You build it because you're preparing to handle institutional-grade volume. The XRP spot ETF filings sitting with the SEC right now are not filed by firms that make reckless bets. These are firms like Franklin Templeton, Grayscale, Bitwise, entities that move only when they have legal certainty and institutional conviction. Ask yourself, does a firm managing hundreds of billions in assets file an ETF application based on speculation? Absolutely not. Japan's Financial Services Agency has already begun recognizing XRP under updated digital asset frameworks. The Digital Asset Market Structure Bill, advancing in the U.S. Congress, creates the regulatory clarity that institutions have been waiting years to receive. Once that gate opens, the risk premium on XRP does not compress gradually. It collapses. And in the background, quietly, without a press release, Ripple's ODL corridors are expanding. Not contracting, expanding, into corridors that specifically serve the regions most exposed to the current energy and currency disruption. The Middle East, Southeast Asia, Japan, South Korea. These aren't random markets. These are the exact geographies where cross-border payment friction just became the most acute. Institutional actors don't move loudly. They don't announce their thesis on YouTube. They sign NDAs. They file with the SEC. They build prime brokerage infrastructure, and they accumulate quietly while the crowd stares at oil charts and panics. The crowd is watching the smoke. Smart money is mapping the structure. Let me give you the specific catalyst stack that is now converging, because this isn't hypothetical. This is scheduled. The Digital Asset Market Structure Bill is on track for a committee vote this quarter. When it passes, and the institutional consensus is that it will pass, XRP loses its final regulatory uncertainty overhang in the United States. The wait-and-see capital does not trickle in. The XRP spot ETF approval window is open. After Bitcoin and Ethereum spot ETFs successfully launched, the SEC's legal framework for approving commodity-based digital asset ETFs is established. Multiple applicants are in queue. When the first XRP spot ETF receives approval, you will see the same institutional inflow mechanics we saw with Bitcoin, but applied to an asset with a functional cross-border utility story at the exact moment geopolitical disruption has made that utility story undeniable. And here's the timing element that matters most. The global macro crisis currently unfolding is not a 48-hour event. Trump has stated this conflict could run 4 to 5 weeks. Analysts are warning that even a ceasefire tomorrow doesn't flip a switch. Oil production and LNG infrastructure take weeks to months to restore. The inflationary pressure this creates is a structural condition, not a blip. The longer the disruption, the more visible the need for an alternative settlement layer becomes. The fuse is lit, the catalyst stack is loaded, and the window to be positioned before that becomes obvious to everyone else is measured in weeks, not months. Here's something that the charts don't show you, but the on-chain data does. Exchange reserves for XRP are sitting near multi-year lows. What does that mean? It means XRP is leaving exchanges, not because people are selling, but because it's moving into wallets and cold storage. Tokens that move into multi-signature institutional custody vaults do not come back to market for a 10% gain. They are gone from liquid supply, potentially for years. We are moving from an era of abundance to an era of scarcity. Quietly, methodically, beneath the noise of every red candle. 100 billion tokens is a fixed hard cap. There will never be another XRP minted. As Ripple's escrow releases continue to be relocked at a rate that the data supports, as ODL adoption accelerates and tokens are burned through transaction fees, and as institutional custodians absorb supply, the float that retail investors can access is shrinking. The math is not complicated. Demand is about to structurally increase, driven by geopolitical pressure on legacy settlement rails, regulatory clarity removing institutional blockers, and ETF inflows creating passive buying pressure. Supply available to retail is structurally decreasing. Once the regulatory gate opens and the ETF flows begin, you will not be buying at these prices. The window to acquire a full position at current valuations is not permanent. The door is closing, slowly, then all at once. I know what this week looks like. I know the red candles are uncomfortable. I know it's hard to hold conviction when oil prices are spiking and inflation is rising and the stock market is losing trillions and crypto is selling off alongside it. But here's what I need you to understand as an analyst. What we're watching right now, the fear, the selling, the headlines, is the noise. The structural build happening underneath it is the signal. Being early feels exactly like being wrong, right up until the moment reality catches up with the thesis. XRP holders who understand the cross-border utility story, who understand the institutional positioning, who understand the regulatory timeline, they are not confused by this week. They are watching the accumulation phase with a kind of eerie calm, because this is not new information to them. The chaos in global markets is not a reason to abandon the thesis. It is confirmation of the thesis. The question isn't whether XRP recovers. The question is who will still be holding when the macro environment forces the world to build the financial infrastructure it should have built 10 years ago. Let me leave you with this. The world just watched 3 civilization-critical supply chains run through a 21-mile checkpoint get disrupted simultaneously. It watched legacy financial markets lose $2.8 trillion in 5 days. It watched oil prices threaten to send inflation back above 4%. It watched the Fed get cornered into an impossible position. And in the middle of all of that, the infrastructure for a borderless, instant, cost-efficient, global value transfer network is still being built. Quietly, methodically, without panic. One is breaking down. The other is being built up. Price is a distraction. Structure is the reality. If you made it to the end of this video, comment bridge below. Stay patient. Stay rational. The math doesn't lie, and the system is almost complete.